Hello traders, the title of the video is how to simplify indices trading and master a NASDAQ 100 index. We are recording this video today because a YouTuber did ask me to record this video and analyze the NASDAQ 100. I have already analyzed the S&P 500 and also the Dow Jones Index. Now we want to analyze the NASDAQ 100 index. Alright? So how to simplify indices trading. Alright? If you are trading, any stock index, such as the FTSE 100, the CAC 40, the DAX 40, the Nikkei 225, alright, or the Dow Jones Index, the S&P 500 or the NASDAQ 100, you are competing with the professional traders. In order to simplify your indices trading, you want to look for trading setup around key levels. So anytime you find yourself day trading, scalping, or position trading, swing trading, any stock indices, you want to make sure, all right, your trading setup are taking place at a key level. You want to ignore any trading setup that is not taking place at a key level, because those ones are likely to be useless. All right, very, very important. The professional traders always trade around key levels. All right, and they know those key levels, and they are expecting the price at those key levels. Decision to buy or to sell the index will occur always at a key level, most of the time. Nothing, as you see the NASDAQ 100 here, the price action here did not go up for no reason. It's all mapped out. There is a reason why the price still going now. There is a reason why people did sell it here. There is a reason why they did buy here. It's not by chance at all. So the fastest way to simplify indices trading is to trade only around key level. We are talking about horizontal key support and resistance level, key level on a monthly chart, quarterly chart, and yearly chart. All right? Even if you are scalping, you can go to the monthly chart, draw the key level, the trend lines, the pitchfork tools, the projection of channel, draw them on the higher time frame before you switch to the 5-minute time frame or 10-minute time frame or even a 3-minute time frame. So any trading setup, scalping trading setup that you want to trade on your lower time frame must take place around key level, and you will have more chance that that trade may be a profitable trade. All right, because if you just sell or buy anywhere anyhow, the professional will just play you as a rugby ball. All right, and you don't want that. So talking about NASDAQ 100, what is happening here? I've drawn some line on my chart. You see, I draw the very, very narrow orange rising channel. This is the channel that the professional are trading now. The NASDAQ 100 is now inside that orange channel on the monthly chart, and you want to draw that orange connecting this low here and this low here. Allow me to draw the first line, and you pick up one point here, and you draw another line that is parallel, and you have your channel. Because the channel is very narrow or squeezed, I don't want to draw the median line of that orange channel, but you want to draw they are selling. You see, they are selling when it comes to the edge of the channel. They are selling there. You see here, because it's a very narrow channel. Here, this is sold it on the edge. Now we are coming again. If I move this one here, we again here. This one, touch it, that narrow orange channel. You see, this is this month now. They sold it. It was coming down near that pink line. So draw that channel, because all the decisions, talking about day trading decision, swing trading decision, are based on this current market pattern, talking about this orange channel. All right? That's a very important information for those who are trading the NASDAQ 100 today. apart from the orange channel, all right, I also draw this, you see, I connect this point here where my cursor is, somewhere in 2012, and okay, and another point here, all right, and we have that first pink line. Then all we do, we choose this point here, and we draw a line that is parallel to the first pink line. All right, you see, right, you see, probably touch the top, you see here, here. All right. So as you can see recently, again, that pink channel, the price brace above the pink channel, this monthly candlestick bar is not yet closed. It will be closed tomorrow because today is 29th of September. So on Monday, this candlestick bar will be closed. So price was coming down during the month of September 2018, came to the edge of that okay, pink channel, and people, they were ordered here to buy, and the price bounced up and was closing here. So as you can see, all the decisions are made around key level on the edge of those trend line and key level. All right, that's it. That's what they are doing. And you want to do again here. All right, if you knew that, you know that there will be some people taking profit here as they come into the edge and they push it back. It's now retesting, okay, that a pink trend line. All right, so draw all those lines, those key level, and trade on the edge of those line. Okay. Again, in order to simplify your indice trading, you must use the pitchfork tool. So I selected this point here in 1991, and I choose this point here and this point here on the monthly chart. And now we have our pitchfork tool. That pitchfork tool was on my chart for years now, you can see here. And what we did after we placed the pitchfork tool on this chart, we draw the median line of the upper half of the pitchfork tool and also the median line of the lower half of the pitchfork tool. The whole purpose of drawing all those lines, many lines, right, is just because we want to have them on our chart. So when we drop to any time frame, you see we are now on the daily chart, how the price was touching the orange, right, you see here, from a double bottom here, triple bottom here on the edge. And all we are looking for, as we finish to draw those lines carefully, we want to make this trading decision around those key levels. When we identify a reliable trading setup on the edge of those key levels, we just implement what we call a different time frame trading method. Here, break the bow, retest the pink one, form a higher low. This is a beautiful one here. All right, on daily chart. So professional will not trade anywhere anyhow. You see here, we're now higher high, followed by higher low, high probability trading setup. Now you form a lower high and form a higher low. So this one is telling us that the bullish momentum was diminishing because it couldn't go above the prior high. If you are taking it here, you'll be very careful. Now it went back again to display a higher low. Look, this trend line on the daily chart, now the price is now below it. Very below, test, but selling on the edge of that blue trend line. All right, so that's it. If you want to know about simplifying index trading, those are the things you need to do. The first step, draw as many line, trend line, channel, project also the channels. All right, so like now you have that orange channel. The price goes above it, you project it up. All right, and then when you draw that projected channel, you may say, Joe, you are just repeating yourself, because that's how you do as a trader. As a technical trader, this is the bread and butter of technical trading. And again, once you draw any channel, you draw the median line. You may say too many lines. Yes, there are many lines. The reason is that's where the professionals are trading. But when you are talking about trading algorithms, so talking about indices, there are many, okay, trading software out there that are trading those major indices, whether it's CAC 40, DAX 30, Nikkei 225, and those trading software, those trading algorithms are trading on the edge of those trend line, those key level, And they do not have to have them like this. They can just identify, the computers know that here there is a median line, here there is a channel, and so on, and decisions are made accordingly. All right, so this is what you too can do to make excellent trading decisions. All right. As I was explaining, show traders for the S&P 500, we see a triangle. Do you remember? So there is a video that I'm going to post today that are titled "Red Hair Stock Indices Trader Could Not Resist the Temptation to Analyze S&P 500 Stock Indices." This is about the S&P 500. And when I was recording that video, I point out for traders a blue triangle on a daily chart. The same thing we have now for the NASDAQ 100. There is a blue triangle also, as we have seen for the S&P 500. We have again a blue triangle for on the daily chart. On the daily chart, same thing for the S&P 500. On the daily chart, we saw a blue triangle, and here it is. And the triangle is indicating to us that anything is possible. The price can break below the triangle, retest and find a resistance, and continue to go down, or it may break above the triangle, retest it and find a support, and continue to go up, as it did for the S&P 500. I will show you very fast for those of you who did not yet watch that video that I mentioned earlier. Here it is. This is the blue triangle for the S&P 500. This is S&P 500 on the daily chart. This is the triangle I'm talking about. For the S&P 500 again, shown traders on the monthly chart. There was before that green, a triangle. The price, as I was telling today, anything is possible. It breaks above that green triangle, retest it. Now it's going up. But as we switch to the daily chart of the S&P 500, we see another triangle. This is a fractal triangle again on the daily chart. And this is what's going on here. And I was telling today to pay attention to that pink trend line. Now that we are analyzing the S&P 500, which is also a stock index mimicking the structure of the S&P 500. You see now, because the S&P 500 is the market pattern that we see on the S&P 500 can duplicate themselves onto other stock indices, i.e. CAC 40, DAX 30, Nikkei 225, FTSE 100. You may see similar pattern again, and this is why you need to do and understand exactly what is taking place. As I also mentioned to traders before, due to the quantitative easing by this major central bank, talking about the Bank of England, the Bank of Japan, the Federal Reserve, they were buying a corporate bond. They have all these corporate bonds on their balance sheets. Or you remember during the financial crisis of 2008. So it will be a very bad news for the central bank. In fact, it's dangerous for central bank that the market start going down big time. So when you are selling, you need to remember that the central bank could not afford to see the market going down at this point in time. That does not signify that the market cannot go down. But just understand that there is this resistance against price market going down at this point in time, because you will create a lot of problem on the balance sheet of central bank that will end up bankrupting, which make bankrupt the central bank because they have all these corporate banks sitting on their balance sheet and they can't afford to take all those losses ladder. So they will resist any bearish move down, and that's why you need to be very, very prudent if you are selling any major stock indices. But all in all, one should not ignore this triangle on the daily chart. Anything is possible. People are selling at the top of that triangle, and some are buying on the edge here. But again, as I show you for the S&P 500, I was drawing that a pink trend line. Here, I draw a black trend line on a daily chart. You see, the S&P 500 was finding a support on that, pink trend line. But look at this. There is the NASDAQ 100 break below that trend line, the black trend line. Now it's finding a resistance on the edge of it. Really go back above it, and find a support. So look for, give priority to bullish signal. I'll go back to the monthly chart. All right, that's it. All right. So you see, we are now on the monthly chart. You can draw a line there. Okay. There's a resistance there, 7679. So you may say priority to bullish signal above 7649, and prior to bullish signal above, prior to bearish signal below 7649. All right, it's a very important resistance level where we are now. So to summarize this tutorial, talking about the NASDAQ 100 that represent 100 technology stocks in America. All right, the NASDAQ 100 is what we call a market indicator. All the major American stock indices represent a market indicator because we can look at the structure or the pattern of those stock indices to forecast what is likely to happen in the general financial market. All right, right now they are bullish, but they are also at a resistance level, and they are all on the daily chart confined, okay, in a triangle. And one cannot ignore those triangles. The triangle, the price can break above it, find a support, or break below and find a resistance. Trade on the edge, and to simplify, whether you are trading any stock indices, all right, Sensex, Nifty, whatever you call it, all right, remember key levels, horizontal key level, okay, trend lines, okay, pitchfork tool, media line, market geometry, projection of the channel. That's where you want to trade. All right? You are looking for trading setup around those key levels, because as an indices trader, you are competing against the professional trader and the trading algorithm, trading robot, trading software that are trading around key level only. Therefore, it makes sense that individual technical traders adopt a similar strategy, looking for trading setup only around key levels. You see a trading setup, you investigate a trading setup. Is it a good one? You go to the higher time frame and see what's going on. Like I was telling you here, the prior, you see here, from a lower high before retesting, there's a risk here, but here it went up. So you know the risk, you investigate the setup, the trend line is broken, you implement, very, very important. Professional indices trader always use different time frame trading method if they are technical traders. All right, this is what we need to remember. Do not forget what I said about central bank, generally speaking, at this junction, about okay, indices trading. All right. If this video has been truly useful to you, we want to know, please let us know by giving us a thumbs up. If you dislike it, or you say, George, I'm not impressed at all, well, it's all about drawing line, nothing special, because in trading indices, you want to concentrate on the price. You can use moving average, you can use stochastic, you can use RSI, you can use divergences, but be sure that what you are doing is taking place around key level, and your attention, your focus, your energy should be on the price, and on the price only, with the key level, trend line, channel, pitchfork tool, and you name them all, okay? If you think this video is a useless blah blah blah, mark it down, all right? If you think it's an essential tutorial, feel free to share with your friend on Tumblr, on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free. And click on the notification bell, so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders, talking about how to simplify indices trading and master NASDAQ 100 index. Happy trading to you all, and I will speak to you soon. Thank you for watching.